Let's get started. I think our next speaker is Ronald, I should say. He's an advocate at PSG. And I think he's got a very interesting topic to chat to us about. Something it's kind of in line with a lot of the issues and the themes that have gone throughout today, particularly in the light of retirement reform. Ronald, can I ask you?
Well, ladies and gentlemen, I do apologize. It seems that you were the only few people that didn't read the agenda and didn't see it was me that was presenting. The rest realized it was me and they left. I'm here to talk a little bit about portfolio investment tax. And just before I started, we already had a debate here in the front. And it's clear that there's going to be a huge difference of opinions about what is the best, endowments, retirement annuities, or tax-free savings accounts. So basically, that would be the basis of my talk for the next 40 minutes. Now, the tax-free savings account came into play on the 1st of March this year. Now, my job at PSG and also in the industry, I'm a director at the FPI and also on the EXCO of the FIA, is to vet product suppliers. And therefore, a lot of people in the industry have realized that if they pick up a scam, they should contact me because I will try and make work of it. So in March, I got a phone call from a financial advisor in Durban who phoned me that he heard of a new scam. And this scam said that you could invest 30,000 Rand a year, tax-free, into a product, and when that product matures, pay no capital gains tax. But you can only invest 500,000 Rand. He told the client that the client is mistaken and that the client was confusing the 30,000 Rand CGT exemption with something else. And he was also telling the client that he would make work of it and stop this scam as quickly as possible. So please, tax-free savings accounts are with us. At the beginning, there was a lot of people that thought it was probably just for a specific part of the population. But I do believe that tax-free savings accounts have a huge role to play. So they were introduced by Section 12T of the Income Tax Act. And as I've mentioned, 30,000 Rand per annum is the amount that you can contribute to a tax-free savings account, up to a maximum of 500,000 Rand over your lifetime. Now, they have indicated that they will increase these limits with time, but we've also seen that those increases happen very haphazardly and actually very seldom. So we need to focus on the 500,000. Now, what is also interesting is that they have not changed the tax rate on any excess contributions. Any excess contributions that you make to the tax-free savings account will be taxed at 40% and not 41%. They didn't change that. There's no tax payable within the tax-free savings account. And there's also a few other benefits, such as no funds that charge performance fees are allowed within the tax-free savings account. This is also, as been spoken, very closely linked to all the retirement reform happening out there. Now, tax performance fees on unit trust funds, that's a debate, probably an hour or 2 hour debate all on its own. At PSG, we believe that you shouldn't pay for something that you actually contracted for in the first place. You wouldn't have invested in a unit trust if they weren't performing, so why now charge double if you are actually doing what you were supposed to do in the first place? So we are very happy with the fact that a lot of these products currently are prohibited from charging these performance fees. You can make withdrawals at any time, and that sounds great, but it comes with a very big caveat. Anything that you withdraw out of the tax-free savings account, if you want to put it back in, is seen as an additional contribution. So if you've invested 30,000 Rand for the year and you withdraw it, you cannot even for that year reinvest that 30,000 Rand. You'll have to wait for the next year